Hello, I'm Ciarán Lynch and welcome to OviCast, the Teagasc Sheep podcast. Each episode, we bring you latest insights, advice and technical updates of the sheep industry. This week's episode, we chat with Seamus McMenamin, Sector Manager for Bord Bia, who gives us an update on the current market trends. We discuss some of the challenges seen in the current trade, lamb consumption figures in the main markets, as well as what's happened in the domestic trade. Seamus discusses lamb supply and demand on the global market and what the prospects are for the coming months. In the latter half of the podcast, Seamus discusses the growth we've seen in some of them key export markets during 2022 and the potential for new markets this season and what impact that might have on the trade. We start off, however, with Seamus discussing the throughput of lambs in the back end of 22 and the carryover of stock into this year.
Last year was overall there was a fairly substantial increase in throughput. So we're talking about an increase of about 200,000 head of sheep, which took it to just under 3 million. To 2.92 it ended up at. But I suppose most of that was driven by more hoggets in the first half of the year. We had a carryover, quite a substantial carryover of hoggets from 2021 into 2022. And then that resulted in a much bigger kill in the first half of the year. But then I suppose as the year went on, then as we started moved into the new season or 2022 born lambs, we had the impact of, no fertilizer being sprayed, lower grass growth, a bit of drought interrupting the grass growing. So and all of that contributed then to maybe men not finishing lambs as quickly as they would have liked. And then with creep feeding, we ended up at the start of December, we had about 100,000. The kill of lambs run about 100,000 head behind where it had been the previous year. Now we had a couple of good kills in December that eroded a lot of that, but we're still talking about a carryover of maybe another 60 or 70,000 sheep into 2023. I suppose then those production challenges on farm too, they've been reflected quite notably in the average carcass weights of lambs being presented for slaughter. If we take a look at the last quarter of last year, you're looking at an average carcass weight of 20.3 kilos, and that's back 1.5 kilos from the same period in 21, and that just is linked back, to the sort of checks in performance of lambs, and then the reduction in the amount of concentrate inputs going into them.
We've touched on some aspects of this in various podcasts with you during the year, but and it has very much been that year or two halves. But we just take the carcass story for a minute. Like at this stage of the season, Seamus, we're normally looking at a large increase in carcass weight as limits go up. A lot more lambs being fed. Are you seeing more underfleshed lambs come through this pulling that figure down, or is it just the whole average is pulled back?
Yeah, well, the feedback we're getting from the processors is that there's about 10 or 12% of the kill is coming in, underfinished. The lambs that just aren't quite there or not fit for killing. But I suppose the more notable thing, and I suppose especially this year when you've seen these huge increase in input costs, is that they're telling us they're getting about 30% of the lambs in over heavy and over fleshed. So they're actually they should have been killed earlier. And in a period where you're keeping a lamb on farm, and he's hitting out of spec and you're not getting any financial gain for it, farmers should keep lambs moving as soon as they're hitting that factory spec. I think the upper weight limit at the minute is 23 kilos in a lot of cases, so a farmer should be aiming for that and getting the lamb away before it hits that.
You can understand the push for the maximum value, but as you said, given the cost of keeping that lamb at the moment, there is a need to keep them moved on as well, not only just to hit the spec targets, but purely for a financial cost to the producer.
Yeah, like if you're keeping a lamb on farm and he's costing you up on a $5 a week just to feed him, and the way the trade is at the minute, prices are stable at the minute, but they're well behind where they were last year, so the longer you keep that lamb on farm, the more he's eating into any potential profit.
It's challenging. We'll come to the current market in a minute. Look, you talked about the carryover. Something we've seen last year as well, a large carryover of hoggets through. This year's indicated there, look, probably 100,000 head, you were saying in December, about 70,000 at the moment. What kind of impact is that going to have on this early part of the season, or how quick do you think that throughput will be pushed through the system?
Yeah, well, thankfully, in the first couple of weeks of the year, we've seen very strong lamb kills compared to maybe the last couple of years. So there's probably about 15,000 of those additional lambs already gone. Have already been absorbed into the system, So if that keeps going the way it's going, they'll largely be gone before the end of January, and maybe we can return to more normal sort of throughputs at that stage. I suppose indications on the trade, like we're talking quotes of about €6 a kilo, bit of an improvement this week, but they're talking about €6 a kilo plus your quality assurance bonuses and group bonuses on top of that, Um, and while we're 50 cent a kilo behind last year, the indications are that it should hold steady for much of February, and then maybe see a bit of an improvement then as we move into these move into March and the run up to Easter and some of these Muslim festivals coming online.
And look, I suppose if we put some of this in context, a lot of that lag is what you've mentioned already. It's the fact that feed cost was up. Possibly lamb performance wasn't quite as good as it should have been last year for various reasons. Input costs been having definitely an impact on it. That's carrying through. That's not maybe your typical carry through of store lambs into this part of the season.
No, it's definitely, there's definitely more. And we've seen an increase last year. Of about, I think there was about 160, 170,000 extra lambs carried forward, and then this year you're seeing another 60 or 70,000 on top of that. And it's a slightly different market conditions this year as well, whereby the demand is the demand in the market is has been negatively impacted as well. So the demand for these extra lambs maybe this year isn't here that was there last year to absorb them.
Just maybe to tease ahead a bit more, and part maybe can explain that price differential we see this year relative to last year. Like the current market at the moment, what are the couple of big challenges that is keeping that downward pressure on price?
Yeah, well, there's a couple of things feeding into that. Suppose that the first thing is just the impacts of inflation on lamb demand in the markets. Like if I look at some of the key lamb exporting markets, like you're talking like Germany there, for example, one of the very big markets for Irish lamb, and you have general inflation of about 8 or 9%, but then food inflation in that market is at 20%. And then if I look at France, you're talking food inflation of about 13%. Belgium in around the same. Like so you're seeing a notable increase in the cost of food, and consumers are then switching. They're really looking at where they're spending their money, and they're seeing lamb as the most expensive protein, and there seems to be a switch to other, maybe what they perceive as more affordable proteins. And then the unfortunate thing with lamb is that people tend to switch out of the category, whereas it's slightly different for beef, where people maybe trade down. Instead of buying your steaks and more expensive cuts, they're buying cubed or minced products, whereas there's not really the same opportunity to do that in lamb.
And that has to be acknowledged. Like we can't substitute within the category of products. It is a more limited range.
Yeah, that is. I suppose if we look then at so that's impacted demand, and then we're also seeing more competition from the UK, and the UK have become a lot more export focused in 22-23 than we would have seen in the previous 2 years. They're actually also importing a bit more product from Australia themselves, and that's freeing up a bit more of their domestic production then for export. And that's then putting pressure on ourselves then in our key EU market. And then I suppose globally, lamb, China and the US have had a huge impact in the last few years in terms of the volume of product they've taken off the global market. And sort of import demand there has been subdued for the last year or so. And as a result of that, then we're seeing a lot more New Zealand product then flooding on to the European market. So you've got more New Zealand product, and it's actually a cheaper frozen product than whereas traditionally they would have been sent maybe higher value chilled. So this higher or lower value frozen product is coming into the EU market, sitting in storage and undercutting the Irish and the UK product.
So you have that seasonal effect of the New Zealand lamb coming in. You touched on what's happening in terms of consumption and just the problem with cost of living. I suppose that's something probably reflected too in the domestic market if we looked at it. A little bit of a perfect storm in some way, Seamus. And I suppose a lot of that's going forward, that's going to depend on what happens in markets. Just we're touching on it in a minute, but like domestically, I'm assuming we're seeing something very similar with lamb consumption. Are we this year a reduction on it?
Yeah, we've seen obviously the consumer spend with products obviously being more expensive. The spend on lamb has increased, but I suppose then if you look at everything, like the volumes being sold, the types of cuts being sold, the buyers, that they're all showing year-on-year declines as people like shift into into other categories. And in particular, we're seeing declines in, those higher value cuts, so your roasts and joints, your chops and your steaks. Whereas if you look even within the lamb category, you look at those cheaper cuts, they've shown volume and value growth, but it's those heavier cuts, the more valuable ones and the ones that give the greatest return to the farmer as well, that are seeing the biggest decline in sales.
Look, if we go back to that international market a minute, look, we're an export-dependent country. The impact of China maybe opening up a little bit more is maybe not going to have a direct impact on Irish lamb going there, but certainly in terms of that New Zealand or Australian lamb, how big of a shift would we see if the demand increased in China for lamb again?
I suppose we export about 85% of all the lamb we produce. And of that, about 80% of it goes into Europe. So that's our key market. It's the one that gives us the biggest return in terms of value and volume. So we actually probably benefit indirectly then from China opening its doors to imports, because a lot of Australian and New Zealand product is redirected there rather than coming on to our European market, and thereby reducing competition. So I suppose China, with the repeated COVID lockdowns and things in the run up to Christmas and that, we've seen weaker demand for lamb imports. However, in the last few weeks, there's actually been a recovery in demand there. So it's hoped as we come into peak production for New Zealand lamb that there will be a further increase in that product that's going there. And I suppose the sheep meat, like China takes about 40% of the sheep meat traded globally. So any change in the import sort of activities there has a huge impact on the lamb trade. So we're hoping that China will continue to increase its import demand. And then I suppose the outlook for the EU market is that the majority of the EU sheep flocks have shown a decline in or are indicating a decline in production for next year. So that'll mean that there may well be a deficit of lamb in the European market, which then will obviously work in our favour if we've got lamb to export.
So short term, our problems like the cost of inflation, cost of living, that's not going to change. But
no,
the competition in the market, short term, that's going to remain a challenge. In the mid-range to longer term, there is potential for the reduction in that importation in Europe. So the demand in theory should increase, which will alleviate some of the price pressure at the moment.
Yeah, well, it's hoped that's what it is. And then as well as that, then I suppose the production outlook for ourselves, like we've seen an extra 30,000 ewes taken out of the production system this year, through increased slaughterings. The results from the scanning from around the country would indicate a slight reduction in the lamb crop. And then with, maybe concerns at farmer level about profitability, that we may not have seen as many ewe lambs being tipped this year. So it's all pointing towards us also having a smaller lamb crop in 2023, which will obviously then help keep a floor under the trade as well.
Just maybe to finish up, in terms of growth in markets, like I know I've seen you presented some data on this before, like we've seen some growth in some of the EU markets, and something else we've touched on previously, the potential for the US market and maybe further expansion in China for the coming year. Seamus, any comments on that?
Yeah, like as I said, like Europe is our key focus because we send the large majority of our sheep meat there, and within that, then like you look at France, the exports there have increased by about 15%, Germany by about 30%, and then there's also been double-digit growth then in terms of what we send to Sweden and Belgium as well. So there has been good demand there in terms of the value and the volume of Irish sheep meat that they're taking. It's just that then when you look at opportunities beyond that, there's international markets that we send small volumes into, but have good potential, like Switzerland and Canada. And then there's the US, obviously, where we have access to the US at the minute. We're just waiting for individual plant approval. So we have a suite of promotional activities ready to kick off in the market just as soon as we can get product there. So having access to the China and the US, as well as the markets we're already established in, it gives you much more opportunities to sell product. And I suppose the widest range of markets you have, the more chance you have to provide the greatest return back to the sector then.
And again, like the opening of a couple of them, shifting some of the volume of our sheep meat to them will have an impact on the price returned.
Yeah, that's it. And particularly if you look at the likes of the Chinese market and those Asian markets, the access to them provides a very useful carcass balancing function as well. Maybe by taking products maybe that wouldn't necessarily be that sought after in some of our key markets, and the more you can spread the markets that you're sending product into, the more likelihood of getting a higher return to the farmer.
Seamus, look, it was great getting an update from you today. Appreciate you coming on.
No worries talking.
We're going to leave it there for this week's episode. I'd like to thank Seamus again for coming on with us, discussing some of the challenges we see at the moment, as well as some of the opportunities that may lay ahead for the coming season. That's it for me for this episode. Again, for updates on our sheep programme, keep an eye on our Twitter page at Teagasc Sheep. I'm Ciarán Lynch. Thanks for joining us. Don't forget to subscribe wherever you get your podcasts and follow us for more episodes.